Good morning to all traders and welcome to this market insights video on FX majors. Today it is the first day of December, excuse me. We did see yesterday some end of month flows kicking in on the dollar side. We've seen actually euro dollar explode into 120, and then we've seen a very big reversal of around 80 to 90 pips from 120, as I think quite a few $billion worth of trades were actually waiting at this handle. Jay Powell has also formally now announced that Janet Yellen is going to be the secretary in the US when, of course, he takes the reins. On the other side, we also had the Brexit talks continue in between the EU in the UK in London. They're not really, we don't see any sign of a breakthrough, but the pound continues to be actually performing quite well, better than euro dollar as well, which seems to suggest that markets might do indeed believe, of course, aside from Brexit, that UK could indeed become the first country to roll out a vaccine for the coronavirus. And obviously, with these two being on our books today, I'm going also to talk about the Aussie against the dollar, because we've had the RBA few hours back actually announcing that they're not going to change their interest rates. They maintain at historical lows, and they did actually mention that the recovery is going to take a long time and is going to be bumpy. Something that also Fed Chair reiterated yesterday, as we saw a script of the speech that he's going to make today, where he said that the recovery indeed with these rates of infections rising is going to take a long time to transpire fully into the economies around the world, especially, of course, in the US. And despite he did warn Congress for the rise in cases and how this is going to affect the economy going forward in the medium term, well into 2021, I would say, he did also say that the Fed is ready to use more tools without saying specifically which ones. But there it is, there you have it. So going ahead with euro dollar, last week we talked about this. It was last Thursday. I was expecting this to move to the upside. I was expecting the 119.66 to be where prices reverse, to be honest, right? So that we can have a wave 4. I didn't want to go up to that previous high, but we did indeed say that we can expect prices to move higher, but for this opportunity to be still on the books, we need to remain below the 120.100, okay? And we did remain below that actually. We turned around 120.30 or so, just a false break above 120. It looks like to me this is going to be 1, this is going to be a 2, then we're going to see a 3, 4 and 5 for an A, then we're going to see a B, and then we're going to see a C. That would be wave 4. Obviously, it can turn out to be an ending diagonal or any other pattern, because this is the last wave for this correction down here in 4. And then we're going to start looking for prices to move higher. As I said before, though, it could be also a case where wave 4 ended here. Okay, in this scenario, I would expect any downside to be held on the upside as long as we are, of course, above this trend line. Okay, so around 180, 85 or so, I won't expect prices to move lower than that. Perhaps even to the previous low, but then again shoot higher in order to consider this as a multi-structural move to the upside, which, to be honest, it doesn't really look like the case, but obviously we need to have always an alternative in mind. Pound, as we said, while Brexit risks are really rising, I've changed the this scenario to the alternative that we talked last week. I was looking at this as 1, 2, 3, 4, and 5, if you recall. But we also talked about the possibility of these wave, this become actually W, X, and Y, right? Which means that wave X is here, right? Apologies for this. So we've got W, X, and Y. We've had that done, and it looks like we are now in the last wave to the upside that is going to take out and complete this correction in wave Y of Y. Okay, so I see this as an ending diagonal, 1, 2, 3, 4, and I'm expecting another move to the upside, 5. Perhaps we can go to the previous high, which seems to be very possible, create a double bottom and then shoot all the way down. Okay, now do not forget that we could see prices also perhaps deteriorating a little bit further lower for wave 4. Okay, looks like it's done here, but I wouldn't be surprised if we see another move to the downside and then continue up for the last and final upside move. And last, USD. I've also changed the main scenario to the alternative that we talked last week here, because obviously we've seen prices moving higher and breaking the invalidation levels that we called last week. W, X, Y, X, and Z. 4 again, wave 4, and then we're expecting wave 5 all the way down, right? Now this triple zigzag, we are in wave Z, the last and final wave, and we are again expecting wave Z to end. Well, funny enough, we are also expecting for wave 5 to end over here, but in this case, and I say fine enough compared to the GBPUSD, right? But in this case, wave 4 was not done. It doesn't look like it's done. I'm expecting this to be a B and then a C, get wave 4 and then get wave 5. And in this case, I think we're going to break to a false break above this previous high, right? Probably head to 74.50 or so, and then start looking for prices to move lower, since also get very nice signal on the market. Okay, so if you've got any comments, don't hesitate to comment. If you've got any alternative scenarios in mind, do go ahead as well. And that is going to be for the day. So we'll speak again tomorrow on another Market Insights video.